Very good afternoon and welcome to Midcap Radar. I'm Ekta Batra and with me is Sonal Bhutra. Well, it's turning out to be a session where we are steady at this point in time. We have the mid-caps which are up around 0.7%. We have the Bank Nifty which is up around 1% as well. And there's a medley of stocks from different sectors which are gaining today. So Shree Cement is your top gainer on the Nifty. That one is up around 2%. HDFC Life is up around 1.5%, and even something like a Kotak Mahindra Bank, which is doing well. Hindalco from the metal space gaining as well. But a lot of action in the broader markets too.
Yes. As you mentioned, the mid-cap index is up around 0.7%. The advance decline ratio comfortably in favor of the advances. And of course, it's the expiry day as well, the monthly expiry. So the last 1 hour of trading action is something which will be very, very crucial. We'll do one thing. We'll start the show with the top headlines and discuss all the individual stories. Market edges higher led by realty and financials, while IT stocks drag. Mid-caps outperform.
PSP Projects jumps on orders worth nearly 250 crores, which they've procured. The company bagged a 143 crore order from L&T, the largest. CMD and CEO PS Patel tell CNBC-TV18 it is adding that it will maintain its order book target for FY23.
Mid-cap fertilizer names like RCF and Deepak Fertilizer gain even as the government directs fertilizer producers to ensure 2/3 of all fertilizer bags have the centre's Bharat branding from 2nd October. The move will leave 1/3 space for corporate branding.
RBL Bank surges for a second day on a large block deal. The College Retirement Fund buys around 50 crores worth of shares of the lender in yesterday's session.
All right, those are the top headlines that we are tracking. The markets, they continue to edge higher, up around 98 points on the Nifty as we speak. But it is a good time to look at some companies in the broader markets as well. So let's go straight to Gulf Oil Lubricants, the stock which has gained nearly 10% so far this month. And this comes even as we are seeing oil prices edge higher. But that is also because the company reported solid revenue growth in Q1 and the numbers looked really strong. Ravi Chawla, the Managing Director and CEO of Gulf Oil Lubricants, is joining us now to discuss the business outlook and the ideas going forward as well. Mr. Chawla, good afternoon. Always a pleasure speaking with you. Q1 was a strong quarter for you. This despite the fact that we saw a lot of raw material and price inflation, and that has continued to a bit in Q2 as well. We are seeing that base oil prices, they have recovered from the lows. We are seeing more buying in crude oil per se. Do you think the momentum that you maintain in margins will continue? You will see an increase. You had guided for around 14 to 16%. Does that stay? Do you have enough space to pass on the price hikes?
Well, we have passed on the price hikes in the retail segment, the B2C segment, but definitely on B2B, it will have a bit of a lag time. And we see that the range of, we got 12% margin last quarter, and we are looking at a 14-16% by Q3. So I would say that demand conditions are very good. We had a very good quarter ending June. Hopefully the prices will remain stable, but yes, they are at the moment. There is obviously base oils have a lag time to the crude, but Q3 we probably see a good margin coming in.
Okay, Q3, you see a good margin coming in. You did mention demand and your revenue was over 700 crores in the previous quarter. So can you share, Mr. Chawla, what the quarterly run rate in terms of sales would probably be for you? Any kind of visibility and any kind of numbers you can share with us?
See, normally we grow double digit about 2 to 3x the market, which this year we expect will be about 3 to 4% growth. And quarter-wise, March is a very strong quarter because a lot of the distributor schemes and it's a year end. April, May, June again is a good quarter in terms of consumption, and that's done well for us also, 34,000 KL. And generally July, August, September, it's a monsoon season, so slightly tepid demand because of monsoons. But we would continue our growth rate. Of course, April, May, June last year was low because of the markets being closed, and therefore the growth and revenue is very good. But we still have grown over the last quarter also by 3%, the March quarter, the June versus March. So we see very good demand conditions, except I would say the motorcycle segment where there is a bit of challenge. All the other segments are doing very well, including the B2B industrial and OEM. They have really picked up, and I think that's a good sign for us and the industry.
Okay, so the growth that you're talking about, will it be volume-led largely or will it be realization-led as well? And what about synthetics? You were expecting more growth in this particular segment. Right now it's contributing in around single digits. How much can you scale it up to?
Well, you see, synthetics. We have a range of synthetics in our motorcycle oils, our car oils. So there is a focus on that, and there are high-end oils also with the BS6 and other things happening. So we would like to obviously take it close to double digit and see how we can do that. And that will take obviously a lot of distribution increase, product range. Of course, we have, and I think that is the way to go. And overall, in terms of demand, definitely all our segments, as I mentioned. We are increasing our distribution touch points in B2C, for example, by 25%. We're trying to do this because obviously 2 years, a lot of the touch points had closed down, but they are bouncing back. So a lot of a focus on our B2C segment, synthetics, and even B2B we see as a good traction with our industrial customers and our OEM customers.
Okay, all right. So B2C is where you're probably focusing your energies on in terms of setting up distribution points. And in terms of CapEx, you are looking at some amount of capex when it comes to EVs. You did invest in a company in the UK when it comes to charging infrastructure. You have made inroads within that space. Tell us where things stand. What can we expect for this remaining part of the fiscal?
Definitely our investment with Indra Renewables, which is a UK-based company into home chargers for cars. We have done the pilot test of the chargers. We're looking to localize it and also look at some imports to start with. So we are talking to some of the OEMs. We will shortly announce, hopefully we can get the charger into India. We also made an investment in Electrify, which is a software as a service company, and we are supporting them to grow. So both these aspects are there, and we're also studying the other parts of the EV value chain where Gulf as a brand in India and globally can play. Basically in India, our brand, our distribution, and our OEM relationships, how we can leverage. So there is a study which we are doing, which will hopefully outline what we can do. But these two investments, we are currently trying to grow with them, and strategically, these are strategic investments for us.
Okay. So generally, if we look at the EV contribution in general, here you're making investments, but do you think they'll start showing in your revenues as well? Will this be a bigger part of your overall portfolio, say 2 to 3 years down the line? And if yes, what would the initial contribution be?
Well, the core lubricants which we are doing today, there is going to be no degrowth in core lubricants for the next 15 to 20 years for sure, even though EV penetration figures are there in two-wheeler, three-wheelers, and something in cars. So we continue to grow in our core lubricants. EV as a stream, these are strategic investments. As we look at it, it's not going to be significant, but we also have a range of EV fluids which we have launched globally. But the EV market is so small that it's not going to be a large volume, but we are already talking to some OEMs for the EV fluids. So I guess it is going to be a small part of the revenue in the next 2 to 3 years, but definitely strategically we have to look where we can play in the EV landscape as we see it evolve, and it will evolve quite fast in India now.
That's exactly, Mr. Chawla, which I wanted to ask you. I know from a 2 to 3 year perspective, maybe EVs is not going to be that big a contributor, and India is really just about starting its journey there. But when it comes to maybe a larger company focus, a strategic company focus, if we were to have this conversation, say 5 years down the line, how much do you think EVs would probably be contributing to total sales? Have you had conversations internally that you're probably going to shift your focus from your core business and maybe focus on newer businesses such as EV?
Well, you see, for us, the portfolio of two-wheeler oils, that is one part which is there. The rest of the portfolio is not going to, whether you take commercial vehicles, tractor, industrial, even some of the other segments which we have, those are not going to be impacted by EV. So we continue to look at our core growth. And if you talk about the share in EV, where in EV we are going to play with our brand, our distribution strengths, and our B2B contacts and our strengths, I think that needs to be clear. And then we can say what part of the EV value chain. Regarding EV fluids, definitely we are going to see a multiple increase in that, but still it's going to be very, very small. Not even, I would say, low single digit in terms of the volume per se. Of course, we'll have to wait and watch, but at the current predictions on EV, it will be a very low single digit in terms of consumption of EV fluids.
Okay, so that is about the EV strategy. In your current business, you said you are planning to increase the distribution points to B2C business by 25%. What is the current number? How much can you scale it up to? And generally, all the expansion plans that you're talking about, maybe making inroads in other segments, what capex would that entail, and what would that do to your debt?
Yeah, so our capex is not really going to be high, and the way we have currently positioned. the capex is going to be just the standard capex for capacity utilization as we look at it. So not really going to be high in that form. The new capex will be after 2-3 years when we want to enhance some capacities. So nothing really which we look at happening in a big way. If we do plan new businesses, then we would have to look at additional capex.
Okay, all right, Mr. Chawla, thanks a lot for joining us and giving us all those details. So that's the word coming in from Gulf Oil Lubricants. They continue to maintain their guidance of 14 to 16% margins and a double-digit growth where they expect to beat market growth yet again. The stock is up around 1.2% at that 462 mark. With that, we'll slip into a short break now. Up next, we'll have Ruchit Jain for a quick technical check on the market. Stay tuned.